If you're originating reverse mortgages in the state of Colorado, you're going to want to catch this next story. And it comes from a recent column that I found. And it says, hey there, Colorado homeowners. Do you have a minute to talk about reverse mortgages? You know, those nifty loans that let folks over the age of 62 borrow against their home's equity. They're pretty cool, right? But what happens when Mother Nature loses her relaxed and your cozy nest becomes just about as livable as a beehive in a bear den? So begins a column by Adam Tabritz. Colorado's House Bill 23-1266, in fact, protects homeowners against foreclosure when a natural disaster strikes, and the bill was signed into law this June by Colorado Governor Jared Polis. Tabritz writes, you might be stressing thinking, great, I have to fix my house and pay back the loan? But hold your horses, he says. Colorado's got your back. And the new bill is about, in fact, hitting the pause button on your loan repayment when your digs are hit so hard you can't live there. And I'm not talking about when your AC busts in the middle of the summer scorch. This is for the biggies. Fires, floods, superhero battles, you get the drift. I have to say I like his style of writing. But what is the catch? There isn't one unless you call following some basic rules a catch. And these are the guidelines. First, you must keep knee-deep in fixing your place with plans to move back in or sell it. Fair enough. But if you pack up and say adios, the lender is going to get antsy about getting their money. And second is you have to keep the chit-chat with the lender active. They're not your enemy, he says. You're going to want to constantly update them and communicate. They're part of the team for getting things squared away. But ghosting them would be like ignoring your plumber's call while your basement is an indoor pool. That's not a good idea. Third, stick to the rest of your reverse mortgage deal. No shortcuts. And don't get any funny ideas that might make your house worth less than it was before. Think of it like this. Colorado is giving you an umbrella for the storm that hasn't come yet. And that's something considering that life loves throwing curveballs. Reverse Mortgage Daily's Chris Clow has compiled the biggest developments of 2023 in the reverse mortgage industry, and what follows is a brief summary. First, after a robust 64,000 plus endorsements in fiscal year 2022, the highest since 2011, endorsement volume fell sharply in 2023, much of that as a result of the sharp decline in HECM to HECM refinances, as the Federal Reserve repeatedly hiked interest rates. As a result, endorsements fell 49% lower than 2022. Next, the HECM limit, or the maximum home value that can be considered in a federally insured reverse mortgage, or a HECM, not the maximum claim amount, was increased $60,000 above 2023's limit. Then there are the demographics. The biggest demographic that was served by the home equity conversion mortgage in fiscal year 2023 were single females, who comprised 39.4% of all borrowers. Single males comprised a far lower share, making up just over 20% of borrowers, and 35.25% of loans served multiple borrowers, likely in the form of married couples or cohabitating family members. In terms of the racial demographics of HECM borrowers in 2023, more than 66%, or two-thirds, were white, 6.58% were black, and 4.84% were Hispanic. Less than 1% of HECM borrowers were Asian, while only 0.38% of borrowers were Native American. Despite sluggish loan volumes in 2023, a positive trend did emerge. First-time borrowers getting a HECM loan accounted for approximately 80% of all HECM endorsements in fiscal year 2023, that after the refi boom. HECM loan production is geographically concentrated. The three leading states for a HECM program based in the fiscal year 2023, according to endorsement data, were California, Florida, and Texas, respectively. When you add New York and Colorado, these five states account for just over 51% of all HECM loan endorsements. As a result, future HECM performance will most likely be more reliant on economic factors such as house price appreciation in these specific states, particularly in California, where the share of HECM maximum claim amount is 2.81 times greater than that for Florida, the state with the second highest share of HECMs. That according to HUD's report to Congress. And speaking of 2023, I will be bringing you the top reverse mortgage stories of 2023 on HECMWorld. That will be published in the first week of February. In our final story, according to a recent blog post in Magnets Finance, Real estate and reverse mortgages each offer compelling benefits, but combining them unlocks enhanced financial flexibility and stability. This strategy allows homeowners to tap into their property's equity or value while retaining ownership and enjoying continued appreciation. Carefully evaluating just how these tools intersect is key to one securing their financial future. The resilience of real estate market historically is true. Real estate values have shown great resilience despite economic uncertainty. Although there are fluctuations that occur in the short term, properties do tend to appreciate over longer periods, and that makes real estate attractive for gradual wealth building, sheltered from other market volatility. And then we can look at reverse mortgages, according to the column, as an innovative financial instrument. Reverse mortgages are for homeowners age 62 and older to convert some of their home's value into funds without the burden of monthly repayments or losing ownership. The home equity conversion mortgage, says the column, is the main government-backed offering. And then there's the customization of reverse mortgage distributions. HECM products offer flexibility in how owners receive their proceeds: lump sums, ongoing installments, lines of credit, or a combination, which allows customization that is aligned with an individual's financial objectives. And then there's the powerful intersection of real estate and the reverse mortgage. By integrating real estate investments with reverse mortgage products, that unlocks enhanced outcomes, says the column. Owners access equity funds while retaining property appreciation rights. And then tapping equity while accumulating asset growth allows customization of equity release to fund current financial needs without having to relinquish future appreciation gains. They're most likely referring to stock investments. That synergistic pairing strengthens the owner's position. And then there is the case study of funding health care while accumulating growth in a reverse mortgage. A 68-year-old homeowner facing mounting health care bills depleted their retirement savings, but by taking out an equity conversion loan, they accessed $125,000 in cash to cover expenses while still benefiting from the property's long-term 30% value increase. Then you can eliminate the burden of monthly payments while generating income for yourself if you have a rental property at a separate residence. Now, that dual advantage creates financial flexibility and stability. And that's a wrap for us for another episode of HECMWorld Weekly. Thank you so much for joining us. If you're watching our video version, you can find us both on HECMWorld and on YouTube. And if you are on YouTube, be sure to subscribe. That way you never miss an upcoming episode. Thanks so much for coming back, and be sure to return next week for more reverse mortgage news that's curated for you, the mortgage professional. We look forward to seeing you soon. Have a great week.